88% put flow to 12% call flow just from last week alone on a filter above 1 million in premium for SPY. That is very skewed to the bearish side. And just from Friday after hours alone, we saw 23.9 million worth of premium just in out the money puts. That is absurd. That is very, very skewed in one direction just from after hours on Friday, let alone the entire week that we saw all of these puts hitting the tape. You can just scroll down through here, just constant all the way throughout this week. Like even these back here earlier in the week for 5 million, 3 million, 4.6 million, all these were above the ask as well. For the highlighted ones, we highlight them on Cheddar Flow for the ones that are above the ask, but just scrolling through all these, just very minimal calls and overwhelming amount of puts for these out the money strikes especially, which is pretty crazy to think that a lot of these are out the money. On top of the fact we have the VIX super high, like right now we're above 30 on the VIX, so they're having to pay a lot more for these contracts, and they're still buying these pretty far out the money as well. So pretty insane overall. If we do go over to the chart here on SPY, yes, there are a lot of lines on here, but this is the original chart I've been showing you guys for over the past year so far. We had this diamond pattern all the way back late to 2021 going into 2022, and as predicted, after we had the head and shoulders plus the diamond pattern, we did break to the downside. After breaking to the downside, we found a support around this 2009 trend line. I've showed you guys in many videos. This one basically started the COVID crash, or at least this was the last resistance we touched before the COVID crash, as well as 2018 correction. And that goes all the way back to 2009's pivot at the low. And we bounced off of that and then fell below, had a week close below, so we went a bit lower. Then we had that big rally. Then we topped out at some point in mid-August. And then after that, it just was a cascade all the way down with only one green week. And this basically was the final like kind of shakeout because then after that, it was just a very strong downward momentum. 3 very large red weeks. And after we broke, which if you remember back in the weekly videos, early September, I was talking about if we had another weekly close below this key orange line, then that'd be very bearish going forward. And this is what ended up happening. We had a weekly close below, and then after that, just continuously went down from there. And on top of that, the fact that we still are seeing this sheer amount of puts, even more puts than we saw when we were back up here, is just crazy to think about. So obviously there are a lot of eyes on Credit Suisse after like the news we've been seeing lately and how much weakness it's had in this past year. Just looking at the weekly chart, this is kind of like a downward channel that we're in right now. You can see the top resistance here and bottom support. This goes all the way back to around 2016, mid 2016. I mean, as you can see here, we actually had 2 weekly closes below this key support level, which is very bearish in itself. Now, could it still find a support technically just on a technical standpoint, not even looking at like the macro issues they're having right now, but could it still find a support here? Yes, it would just have to get back above this support level that I have on here for this downward channel so far. On top of that, yes, they are having like a ton of issues, as you can see through like the news and everything. Just be mindful of all the news. Obviously, they're not going to openly say that they're having tons of issues at the moment, at least the company in itself. They don't want to scare people. And then also on the inverse of that, a lot of news articles want to incite fear in you because that's how they get your attention, and attention means money in this economy. So there's going to be a lot of lopsided things out there. So basically, I'm not going to really pay attention too much to the news of it. I'm not going to be actively trading this. However, if we do see big falls below the support level, and that's going to be very, very concerning, at least just on the stock standpoint, which also can, at this point, correlate to the market in a whole. So I do have to be careful of this, and I will continue to look at CS as we go forward here, because this weakness, especially if it starts to start cranking downwards, is going to be prevalent in the general market. But along with fear, because that's kind of the motto of the past week, I do want to talk about the VIX here. Again, it is a little bit harder to chart VIX, as I always have to tell you guys like before I go over technicals on it, because it's not necessarily an individual ticker. We're tracking volatility here, but for the most part, it has stayed true to these patterns that we've seen so far. You can see the bottom support line, the blue that I have right here, as well as the top resistance line, the blue. We did have a major pause around this range of my box, which I had way back like in August, that I had this box level that I had up here. So not a surprise we saw a pause here because this is a key resistance like range, as well as the fact we had this trend line right here. If we do continue up higher after pausing here and it doesn't fall down off of this, then 35 to 37 would be highly likely to happen after that. It just would have to pass through kind of like this box pause range that we're in right now. But This is something to note because the longer we stay above this blue trend line right here, the more bearish on the overall market and like SPX that we can be, because this is showing relative strength up here. It's holding above this level. It's not like we just spiked up above like we had in the past and then fell right down, kind of like we had up here. Right now we are holding at these levels of 30 plus on the VIX, which is very difficult to do in itself. It's difficult to have volatility heightened for that long. So we will want to continue watching this, especially after the fact we had a major down day on September 28th, but it still has managed to hold up so far. So continue to watch it, especially if it stays above 30. That's kind of the key level to watch as of now. And that'll give you a better insight if we are going to continue up higher and see even crazier volatility levels, which will imply a downward trend on SPX and have a continued downward trend on top of what we've already seen. So I like to reference this along with the DXY. So the dollar is a good thing to reference. Right now, if I just draw a simple pattern right here, I do have it on another chart as well, but I'll just show you how I draw it out. We do have this key pattern that we're in right now. We had almost a retest from this past week on the daily of this level, pretty close. But as of now, we are still above this pattern that we were within before. As long as it stays above, the market can be subject to some more downside, just because the dollar is showing strength as of now, because we had this big breakout up here. We still are around the low levels, even though the dollar has had some form of a pullback. So if it bounces after a retest and continues up higher, then that would be bearish on the market as well. This is all a bunch of variables that I like to track to determine possible weakness in the general market, such as VIX, DXY, and also the volatility of volatility, which is VVIX. And that, funny enough, has actually been pretty consistent with technicals lately. I referenced this in previous videos, like back in May and stuff, but we do have, if we go to the weekly chart right here, we did have a key level from all the way back in 2014 that acted as a support, and you can see right here we consolidated around this level for a very long time, but it did inevitably bounce off of this level and continued higher until my blue level that I had right here that goes back to January of 2020. And right now we have had all of the weekly closes below this level. You can see we went above during this week, but closed right on the level. Funny how that works. Technicals are pretty funny how you have closes like this perfect right on levels, but going to be very interesting. Will we have a weekly close, especially 2 weekly closes above this level, because that could incite a lot more fear in the market and could be a leading indicator of a lot more volatility to come if we do have some more strength above this blue level right here. Otherwise, it would be chop in between, but I like to track this every once in a while to get a sense on where volatility can spike in the future. Lastly, let's talk about Apple. This is the biggest holding in the S&P 500 as well as NASDAQ, so this is going to weigh very, very heavily on the market. I've referenced my channel that I've had since all the way back in 2020. We have the bottom support here, this blue line, and the top resistance over here. We did have a major rally through and back into the channel where we found a resistance on the top resistance that I had previously, fell down to the bottom support, kind of found a support and chopped around here. However, this weekly candle was very critical, or at least this one back here in end of August, because we closed below. We stayed below for the following 2 weeks, which was very bearish, and continued downward. We had a few retests of this level up here, as you can see on the weekly candles, but for the most part we have continued down, and this past week was very, very bearish. This is a very bearish candle, just technically speaking. So Apple not looking the best so far, and as you can see in the flow is reflecting that. In just last week alone, 97% put flow to 3% call flow for over 1 million in premium, and we've seen some crazy orders. We saw 5.5 million in premium for the 120 put, as well as on top of that 2.5 million in premium for 120 puts. Both of these 11/18 expirations, so pretty close in expiration, relatively speaking, to the premium we've been seeing. We've also seen 4.0 million for 125, 3.9 million for 120. Crazy amounts of premium on this. 7.4 million. This is a leap put here, but for the most part, you get the trend. It has been very, very bearish in the past week on Apple in terms of the put flow, which has been, this is honestly probably the most bearish week we've seen this year so far in terms of put flow. Maybe there's only been a couple other ones, but not looking very good for Apple as of now. Definitely wants to find support around previous demand levels, like around this range, if it wants to at least have some form of bounce. But for the most part, this back here, which I've been referencing for so many videos, the fact we've been retesting this was the pivot. This was the key risk reward for a downward short. which I also referenced in previous videos, and now you're seeing the effects of the fact that we were not able to reclaim back into this channel when we were back here, and now we've just been consistently falling off of there. And as of now, it looks like the big money sees a lot more potential downside going forward from here. So some things to note, especially with this being the largest holding in the overall market, you just have to be super careful. And one last quick thing with that, we do have Tesla right here. Tesla has shown relative strength to the downside of the market, so that means you have to be very, very careful if this thing actually starts to show some downside force, because if this thing starts to go after the fact that we saw Apple starting to go, because remember, Apple was showing relative strength compared to the rest of the market for a while, and then it just tanked all of a sudden off of that. If Tesla starts to tank off of this and we see a weekly close especially below the previous weekly close we just had, like around this 265 level, which has been a support previously. If I just draw a line right here, you can see that this has been a support on the weekly previously, like around this range. If we have a weekly close below this level, that is very bearish. It means it was not able to hold kind of this mini flag formation. That means that this thing is going to get rejected a lot further from that. So you have to be very careful with both of these, because they are large holdings in the market, and they will impact the market as a whole and could have a lot of bearish emphasis if things start to go to the wrong way. So do be careful of it. Watch the levels that I mentioned in this video, and yeah, just make sure you're safe in the market. With this enhanced volatility comes a lot of opportunity for traders, but you can mess it up pretty big time if you do not size in appropriately and have risk mitigation tactics. So do be careful in these market conditions. But this is pretty crazy, because this is not something you see every day in the market. This is some pretty crazy conditions we've been looking at right now. So if you can trade it and you can pass through it this time period that we have right now, then you're going to be on the other side of the mountain in the future, and we'll be able to be very successful with trading. So other than that, I will see you guys in the Wednesday video, middle of the week.